Hey everyone, Michael here. In today's video, I want to show you guys how to use reversal bands on your trading view charts. This is a great way to make consistent profits by finding potential points of scaling out. That way you guys can lock in those profits and not have to worry about you not selling off anything and it coming back down to your buying price and you eventually selling with a loss. It's a horrible feeling, so this kind of mitigates that to a certain degree, okay? Now, I'm using the Chart Prime Oracle indicator. This is a fantastic indicator out there. If you guys want to learn more about it, I'll put a link down below in the description for you guys. This is one of my favorite indicators out right now because of the uptrends. I love trends, you guys know that. But you guys can see right now, we are in a current uptrend. Things looking nice. But every time we run up into this red band up here on the top side here, I am usually looking for a scalar opportunity. And you can see so far, I probably would have had at least four opportunities to scale out here. Now, depending on when you guys buy, it's always up to you guys and which type of strategies you guys use. For me, and primarily, I wasn't even using the uptrend because we had something kind of crazy going on here. We had this banking crisis going on with federal rate hikes and all that nasty stuff, okay? So what I had to be buying off of here, and if you guys were watching the live stream, you guys saw this as well. We were kind of watching this 200 daily moving average right here. And let me turn this over to the daily here. There we go. And we were buying off of this nice yellow line right here, and we had a great opportunity. But now we're looking for opportunities to scale out. A lot of times you guys may just be looking for levels of resistance, something like, level of resistance right there. And you can see it popped up right there temporarily, level of resistance right there, and maybe another one up here kind of matching up. This will actually do a lot of that work for you guys, so you guys don't have to have a lot of those lines on your particular screens. So in this circumstance here, we didn't actually hit the red, the upper side of the band here, so I wouldn't have actually scaled out right there. And that let me actually experience this nice larger move up here, which made me a little bit of money. What I did see was a bearish candle right there, but overall we were bouncing off of a pretty good day, so you could actually ignore that one, which is a really good thing to understand, okay? Next up, this is our first scale up point. We can delete it right now. And we continue to grind up. And you can see within these waves, we really kind of went back from the lighter waves over here to the darker ones. The darker ones, I'm not too enthusiastic about scaling out. It's usually when we start getting into these top three, where you can see it's almost like a muddy brown. Then it goes into a lighter red, then a little bit of a darker red, then a darker red, and so forth here. If you guys can get it into this darker red right here, or probably these two lighter red bands here, that's usually where I'm looking to sell out of, especially if you guys are using this on the daily and on the 4-hour charts. On the 15, 30-minute, maybe even the 5-minute charts, you guys can also just look for some of these smaller red zones because you will see this changed up quite a bit. However, again, we move up here, another scalar opportunity for us and another scalar opportunity there. Now, of course, you guys might be using the daily chart or looking for other levels of resistance. You guys know that 25 up here was just a horrible level for us. We had been trying to break out above this for a while. However, if you guys use this for scaling out, it is a great opportunity. Likewise here, as you saw, we had a dump before going into the big banking sector crisis because of what was going on here with Silvergate Bank. You can see, boom, right down here, that was a great opportunity to scale it, especially as we got into that browner section right here and even into some of these lighter greens, okay? Over here, cool off, came back down again. You can see even a smaller dip right there, cool off. So if you guys are doing some day trades in here, let's say on a 15-minute chart, and you guys come back over here to the 4-hour chart, you guys are going to be able to see that, whoa, I might want to scale out a little bit here, scale out a little bit here, just in case something kind of crazy is going on. Again, there was a big banking crisis going on here, but even when you guys see these uptrends that go into these levels of resistance, you can see how high and fast this was going. You have to cool off at that point, and you can see the band represents that. And it actually went so far because it saw the volatility here. And even if we did bounce up, it gave you an opportunity to say, hey, if we got back up here, probably another good opportunity to start scaling out. Even over here, tapped on it slightly for a scale out. And over here, again, bouncing off of these support levels here. So the way I would try to say this for 4-hour charts is if you guys are looking at this, I wouldn't have it turned on all the time. In fact, let's just go over here to the daily charts as well. You guys will see we're actually in this scaling out zone right now. You guys don't have to scale everything just apart because you always know things can go up, especially with the market and, federal rate hikes and stuff like that. But when you hit these support zones, if I get rid of the 200 daily moving average, look at there's a buying opportunity right there as we're starting to slow down. You have two bullish candles right there, both saying to buy, and boom, you're looking pretty good, okay? As well, you can see over here, if you guys did this normal trade, which is your typical breakdown trade where we broke down here, acceleration day 1, acceleration day 2, third day really pushing down on that 200 daily moving average or this reversal band here, you have an opportunity to catch that reversal and make some good money off of it, okay? Even over here, we're currently in the middle of reversal. This is where people are most likely going to be looking to put some shorts on right now if we weren't going to have rate hikes tomorrow, okay? Now, if you see this and it's kind of going more sideways, I don't really mess with it at all. I like to use it during more volatile times when you see lots of ups and downs in the market. I find this to be a lot more adequate or accurate, in my opinion, here when I'm doing those types of trades. So one thing I want to break down here is for you day traders out there now. So let's say we're back over here, back to when we had that crash on Friday, March 10th, back when the banking crisis was going on. Well, if I went over here to the 15-minute chart, and you can see when that crash actually happened here, right? You can kind of see how that band was pushing us down lower and lower and lower, all right? So once I see this actually occurring on the 4-hour chart, that gives me a better opportunity of when to buy. So because if you're using the same metric here on the 15-minute chart, it's okay. Don't worry about the trends here. It's not optimized for the 15-minute chart. It's optimized for the 4-hour and daily charts here. But as you guys are looking at these bands, it's little opportunities for you to scalp, and you can see some nicer moves down here. But as it starts to move faster and faster and faster, you can see those bands really try to emphasize that to say, hey, you're going to have more opportunities for it to dip, dip, and dip. And if I scroll this out a little bit more here, there you go. Now on the 15-minute chart, when we did start to slow down, see, this is a lot more accurate if you guys wanted to do more of the sideways trading here. Even then, you know, I am most likely just going to be using it to scale out. Like, okay, I'm scaling out a little bit here, scaling a little bit here. Keeping in mind what I'm looking at the 4-hour chart is I'm looking for a larger bounce, and that larger bounce took a while to happen. But when it did happen, whoosh, look at that move. You can see it bouncing up in there. Slight scale out point if you're buying that little breakout here. Small scale out point, small scale out point, scale out. Potential scale out if you're shorting, but who's going to be shorting into a move like that? And then as always, you guys can be buying more after a pretty big dip. And I think that's something where I like the volatility plays of this. If you guys can find a way to buy the dips, and in this circumstance, you know, just a slight breakdown, it wasn't anything crazy. But all of you guys, whenever you guys miss this initial move, many of you guys have this feeling like, oh my gosh, I missed out on the entire rally. If you guys can find some type of smaller breakout to occur and then wait for that to hit the reversal band, that's usually going to be a great opportunity for you guys to buy into the market. Now, in this circumstance, we had a couple different breakdowns. I showed you guys the first one. The second one was right here, right? Broke down, heading more sideways, and then we ran into it. I think this type of strategy is going to be a little bit easier, but some of you guys may be just looking at the 5-minute chart in the same context. So if I were to zoom out again, scroll all the way back over here, because we want to make sure we're precise here. There we go. You guys can see that first breakdown, right? Came right down into the reversal zone, right there, and he had a small opportunity for a little bit of a pop there. My big thing here is, though, the 15-minute chart definitely looks a lot easier to be trading off of, and that's what I recommend. However, if you guys are looking for those reversal sides on the top side here, reversal there, reversal there, reversal there, they can give you some good opportunities, but I want you guys to also pair this with other technical analysis. So don't just use the reversal bands, use the point that we had this resistance level up here, right? Resistance, facing resistance over here. That's usually where you guys are going to be looking for those bands, okay? Now, you could also do other stuff like this over there. You can see that we hadn't broken out yet, but we were trying, and that also matches up there. You guys are going to have to use each pattern appropriately and understand some of the basics before you start using this. This is not to be used alone, but this can be very helpful if you guys just want to have a flash shot of how overbought, how oversold we are, or if we're looking at any zones of support that you guys might not otherwise see. This is going to be one of those great indicators that I recommend you guys using. Thanks, everybody, and have a great rest of your day.